Hey everyone, good evening. Welcome to tonight's live. Today is the 30th of June, Sunday, 8 p.m. Eastern Standard Time, New York session time. We're going to go over a couple of news events first. We're going to go over through the Forex Factory calendar that I usually use. This is my go-to when it comes to keeping an eye on any type of news, whether it be red folder, orange, yellow, but we always want to focus on red folder news, right? And I'm just so used to using Forex Factory. There are other different news related websites that you can definitely use, but for me the easiest one is going to be Forex Factory. I do come from a Forex background, so that's pretty much why I use it all the time. It's just a habit, right? I always check the news as well every single morning right before jumping on the charts, just to remind myself, if I'm getting into red folder news or not. Now, without further ado, we're going to go over the red folder news for this coming week. Remember, I do not trade the Asian session. I prefer to trade the New York session. I've traded the London session a few times, but living in the New York session time zone, it is much easier for me to just trade the New York session. Trading the London session would require me to wake up like around 2 or 3 a.m. locally my time. So it's a little bit difficult juggling between that and a full-time day job. So yeah, without further ado, let's jump on the charts. Well, not the charts. Let's jump on the news. So for the calendar, today, Sunday, we have one red folder news. It's Euro and it's all day. Monday, tomorrow, we have all day Euro as well. I was going to say Euro again. Euro as well on Monday. That's going to be all day. Followed by 10 a.m. New York session time. So we're talking about New York session 30 minutes after the New York Open. USD, red folder, ISM manufacturing PMI. Tuesday, what are we seeing? On Tuesday, we see red folder news for Euro during the London session. Red folder, core CPI, and CPI flash estimate. New York session open on Tuesday. We have red folder, USD. Chairman Powell speaks. So be very careful with that. That could go anyway. 10 a.m., 30 minutes, which is after the New York session open. We have the JOLTS jobs opening. Going on to Wednesday, we see an hour and 15 minutes before the New York Open. We have non-farm employee change, USD red folder. Another USD red folder, 15 minutes right after that. Unemployment claims. This is 1 hour before the New York market open. And then 30 minutes after the New York market open, we have another red folder news, which is the ISM service PMI. And then in the afternoon, we have FOMC at 2 p.m., which is the New York session afternoon session. Moving on to Thursday, we have CHF during the London Open, all day GBP. And then Friday, we have Canadian dollar and USD 1 hour before the New York Stock Exchange Open at 8:30 a.m. All right, without further ado, let's jump on the charts themselves. So the chart you see on the screen is going to be micro, E-mini, NASDAQ, right? So we're looking at NASDAQ charts right here. So last week we did draw out this zone and we did draw out these fibs as well. What we're looking at, we are so extremely bullish until we're absolutely not, right? We're looking for a re-entry here on this daily fair value gap 50% mark on this daily candle over here. This candle was made on the 12th of June. And we had another fair value gap over here that we were trying to use as an entry for a bullish position. But then you have this candle that closed through it and then followed through as well, which inverted this, right? So when price action broke through it and closed the candles underneath it on the daily time frame, it invalidated this fair value gap. So this fair value gap, instead of being bullish, it became an inverted fair value gap. So now it's a bearish fair value gap. And for the most part, it's held as an inverted bearish fair value gap, right? So it became inverted from bullish into bearish. And now that bearish fair value gap is holding, because even though you got this wick that went right through it, The candle body itself did not close beyond the fair value gap, the new fair value gap itself, right? Which the true fair value gap would be right here. So that's what it looks like. And then the full fair value gap, which is the inverted one, would be all the way down here, because that's this entire candle body here. Right? So this is holding pretty steady. Looks like since we hit this all-time high, 2374.5, let's round it up to 2375. It's been losing momentum, and we're getting a lot of bearish pressure as well. Right? So it looks like we might be looking for bearish positions on a lower time frame intraday. Let's check out the weekly. What does the weekly say? Weekly is opening low. Daily, we're opening low. And we still have this identified daily fair value gap. Make sure to have your alert set on this one. I know I set my alerts on this before, but I don't know why it just erased it. Or just in case, set your alerts on that. And then what else? We're going to set alerts over here as well. We're not going to go too far down, but we're going to have those. So this alert right over here, it's going to be 19647.50. And then the alert underneath that's going to be 19160. Let's jump into the 4-hour time frame and see what's up. Four-hour time frame, you're going to see pretty much the same story. Fair value gap over here was bullish. We're looking for an entry there. Broke through it and disrespected it. Now it became an inverted. Right? Now if you look at the overlap itself, this is the overlap over here. That's the true overlap of the fair value gap. Right there and there. And then you can see the candle bodies on the 4-hour did not close beyond that fair value gap there as well, which makes it still valid. I'm going to create a sell side liquidity over here. It looks like it's already tapped into that. So then we're looking to tap into this buy side liquidity here. Daily fair value gap is right here underneath, right? So we want to retest it. Price action is going to come and test that out. We have a fair value gap over here. It's very tiny on the 4-hour. Then we have another fair value gap over here as well. Looks like it's already tapped into that and it's been mitigated. Yep, tapped into the halfway point. So now that's mitigated. That one's no good. That one's not going to hold. What else do we see? Daily fair value gap 50% mark overlaps with this 4-hour over here on the left hand side, this 4-hour candle. Let's modify this. Let's add 4-hour there as well. And yeah, I mean, looking at our price action, how it is right now at the moment, that's pretty much what all we have. We're looking for bearish positions. This is crazy. Drawing the 50% mark over here on this fair value gap. Bearish. Price action came and tapped into that like perfectly. You see that's on Friday. Wow, I can't believe I didn't catch that. I didn't see that. Would have set a limit order there. Limit sell. Boom. That would have passed any account right there. It's always good to look left, right? So if I would have actually pulled up the charts, went through the setups like I do right now, I would have caught that on Friday. But I didn't trade Friday. So that's why I didn't catch it, but that's super clean, right? Fridays, I usually try to stay out of the market because my back testing has proven that when I trade on Fridays, it is not profitable for me whatsoever. Whereas if I don't trade Fridays, I usually tend to have 7% more profit towards every month. All right, so we're gonna move on to the next pair. We already identified a couple of different sections here, different areas, points of interest on NASDAQ that I believe should be tapped. Keep an eye on this buy side liquidity. We might actually just tap into here, wick above it, not break the all-time high, and then continue all the way down to this 4-hour and daily fair value gap 50% mark. Something has to happen up here, right? And this is extreme premium zone. I'm going to color this up as well. Anything beyond above here, this area here is a premium zone. Anything below here is a discount zone. So whenever price action comes up over here in this area, I am going to be looking for shorts and vice versa. Let me see if I still have this saved. Yeah, premium discount zones. All right, so let's move on to metals. We're looking at gold right now. So for gold, I marked out this entire area as yellow. This entire area is a ranging area that I identified. We did reject off this all-time high over here. Looks like we have equal highs, right? Relatively equal highs over here. We have a 4-hour daily fair value gap over here that's bearish. This is still active. Has not tapped into it. Has not been mitigated. Put you to the right. Price action is doing a double bottom over here. It didn't tap this weekly fair value gap 50% mark. So I'm still expecting price action to come back into this and test it out somehow. But you also have this one that's a 4-hour and daily that's still active. And it also converted this fair value gap that was bullish, made it into a bearish inverted fair value gap. Then we also have this one over here as well. Tapped into it. That was bearish as well. And it's been mitigated. So now it's no good. So now price action should seek whatever's above here. This area over here is 24.5. Let's go down to 4-hour. Four-hour, we have this fair value gap over here that overlaps our fibs beautifully. Price action has not come and tapped into that as well. New market structure low over here. So let's redo our fibs. Fibs are still there perfectly. 0.705. But we also have an order block over here. So I kind of want to do the entry over here at the 0.8. That's going to be way better for me. I also like to do overlaps of order blocks and fair value gaps. For me, like those are the high quality entries. So we're going to mark that out. We're going to set an alert on that. It's going to be right here. Let's be a little bit conservative. So as close to that order block fair value gap as possible. This is going to be at 2368. And then we're going to be looking at that because we also have another fair value gap over here. If you can see at that line, you have a fair value gap here, 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 and here as well, overlapping 4 times, right? So we should see some kind of reaction there with price action in a bearish momentum. If not, and it breaks through, then it's going to seek this area here And then we should see a correction to the downside, seeking that weekly fair value gap. This also looks super clean here too, right? So bearish fair value gap over here, and then you have a bullish fair value gap with a market structure shift. You leave this fair value gap behind here. This could be a nice point of entry. Set an alert over here. You might even be able to set a limit order there. All right. If you're able to hold overnight, which you can't do on futures, which is unfortunate, but you can do something like that, right? Entry there. Low of this candle, and then take profit. You can probably do take profit 1 over here at the 0.8, and then take profit 2 fully at this area over here, which it should target. So set your alerts on that. Point of interest has identified as 23.27. And the reason behind that is because it's an inverted fair value gap, and then you have a fair value gap after the inverted fair value gap with a market structure shift. Price action seeking the highs. Need to do a little slight pullback here. Tap into that for some extra liquidity. And then use that as rocket fuel. Go up. Seek this level here, which is 0.8. If it breaks through, then it's going to seek this area here, which is the 4-hour and the daily fair value gap 50% mark. Now moving on to silver. Silver right now is in a daily fair value gap. Price action closed up still within this fair value gap, so we're still good. Let me clean this up a little bit. So this, yeah, I think the charts, my charts actually moved a little bit because that shouldn't be there. This should actually be like right here. That's super weird. All right, so now because of the fact that these candles actually close beneath this fair value gap, right? This fair value gap is actually a 4-hour and a daily that overlap together. So you have that additional confluence there as well. So you have a little bit over here of the 4-hour. Price actions broke through that. That's no good. Daily. Price action broke through it over here. And over here, fully closed. 1, 2, 3, 4 candles, 5 candles closed underneath it. 4 candles because this one hasn't closed yet. So this here has become an inverted fair value gap. This is no good now for bullish, and we're looking for bearish entries. And then you would have been able to use this as well. This was done on Tuesday, the 25th, and then price action came over here on Friday, tapped into it, and then continuation down. Right, we're looking for bearish entries. Trend line is bearish. And it broke through that daily fair value gap right there. What do we see on the 4-hour? 4-hour, we were expecting this to come back up a little bit. So that's why we identify these levels over here, like 30.60 and 30.45. All 3 of these fibs overlap with this fair value gap as well. But you can actually move this down to now the new market structure. And as you can see there, the fibs 0.705 and 0.8 still overlap with that. We're going to set alerts on these 2 levels. So for additional confluences, you're going to see bullish fair value gap inverted by this fair value gap over here. So we're going to use the confluences of these overlapping fair value gaps and the OTE fibs as our entries. The top one is 30.51, and then the bottom one, which is 0.705. This one is 30.31. Set your alerts on those. We're going to identify that. This looks like a very important area because you can see here fair value gap, price action rejecting, fair value gap, massive fair value gap over here to invert all of this. Price actions rejecting off this area here. Fair value gap through again. So it looks like there's a lot of liquidity, a lot of pressure in that area right there. We're going to keep a close eye on it, set your alerts for those two different levels. And we're going to be looking for shorts here. Moving on to Euro, go to daily. This fair value gap has become inverted. Price action broke through it multiple times. I'm going to kill these fibs. Kill this too. Yeah, I think something happened with my charts. Like the stuff actually moved. That looks good. All right, cool. So that price action broke through, became inverted. Price action went down underneath it again. Yeah, we're gonna keep it just there marked out, but we're not gonna really trust it. It's just pretty much there as a placeholder. We're gonna see like the price action broke through it. It was bearish momentum. I have this trend line that I drew as well through the daily. There we go. That's much better. There's a fake out over here and then came underneath it. Price action should reject around here as well. 1.08505. But we're looking at the daily. Let's check this out on the 4 hour. Because on the daily, this would have been a fair value gap over here. Daily fair value gap. And then you also have an opening week gap over here. Both of those have been tapped into and mitigated. Now we have an opening week gap over here. This needs to get tapped into and mitigated. So if I were you, I set my alerts, right? Set your alert for 1.07675. Remember, these prices, these entries that I'm using are based on the CME futures broker, the main central, liquidity pool for futures. There's only one, thankfully. But if you're on like a Forex broker or any kind of other brokers, they all have different liquidity pools. They have different prices. So pretty much just use the gap, right? Use the gap, draw out the tool, the rectangle tool, and it's going to tell you the exact price as long as you have that halfway point marked out. Price might vary, but the area stays the same. Cool. So that's what we're looking at on the daily. We're looking for bearish positions, bearish entries. But we're looking for the 4 hour. Maybe the 4 hour is going to give us a clearer direction. We have this fair value gap here. Bullish, became inverted, disrespected. We're going to mark this out. This is going to be our entry. Halfway point on this is at 1.08100. I'm going to mark this out. 4 hour fair value gap. 4 hour fair value gap, 50% mark. Let's lock you in. We're looking for price action here on a lower time frame. Price action comes in here on 5 or 15 minute chart. We're going to be looking for a bearish entry, which is usually a market structure shift after a liquidity sweep. This looks like it might actually sweep into this trend line and then make its way back down. So keep a close eye on that. This might actually happen throughout the London session this evening. So keep a very close eye on that if you're a London trader. I don't know about Asian session though. I don't know if it's going to have enough volume to break through it, but it might. It's only going to take a few candles. Might even break it by midnight tonight, Eastern Standard Time. But who knows? Set your alerts. Make sure to keep an eye on that. Going into GBP right now on the daily. GBP daily looks still very bullish. Looks like we had a slight pullback. Over here looks kind of like an equal high. We have a daily fair value gap over here that was disrespected. Bearish became inverted as bullish. Price action tapped into it almost perfectly. If you guys set your alerts, you would have gotten the alert for that, and you would have gotten tapped in, and you would have been super happy and merry and on your way. So if this has been tapped into and mitigated. Now we're looking for price action to go somewhere. What do we have over here? This fair value gap has been tapped into and mitigated. So you should probably see price action tap into here on this market structure high. Just to be conservative, you can target the top here as well. But I want to be very conservative and target the market structure candle body. That looks like a 1.28.22. Excuse me, 1.2822. Let's check this out on the lower time frame, like 4 hour. What does the 4 hour tell us? Fair value gap, inverted, and then broke through it again. And on this one, let's put that. Let's seek that. It's going to be a 4 hour buy side liquidity. So that could be your take profit one and then take profit through over there. Just to be conservative, just in case it breaks through or it dumps because of red folder news. This one, move it up to here. That's on the 4 hour. That looks good for the 4 hour. Cool. So areas where I identify as 1.2746 and 1.2845. We've already tapped into this daily fair value gap. If you were watching my videos from the previous weeks, we identified this area here and we were looking for a long position. This is 1.2620. You can probably re-enter on the lower time frame, like 5 or 15 minute. Just be very careful when entering. You're looking for a market structure shift to the upside. Right? So look for a market structure shift. And a fair value gap or displacement candle to the upside, and then use that as your entry on a lower time frame. We're looking good so far. Last pair is going to be JPY. JPY on the daily. How do we look? We were waiting for this to be tapped into, and it was. Right now we're on a vicious downtrend. So if you're thinking about traveling to Japan, now's the time. Look at this. Sheesh. Right? Wild. Vicious little downtrend. So we're looking for what? We're looking for bearish positions until we're not. That was a daily. Nothing really clear on the daily. We have a fair value gap over here. We had a fair value gap here that was tapped into and mitigated. I could probably just copy and paste it over here. Yeah. So this is now the next bearish fair value gap that we're focusing in on. All right. This is at approximately 0.0063960. But I mean, if we draw the fib, this should be it. Yeah, we draw the fib. That's not really, that should be probably like the 50% mark. Yeah, I don't know on that one, to tell you the truth. I don't think it's as high quality as I was expecting it. It's literally at the 50% mark. So do with that as you will. For me, it's not a high quality trade. It'll probably break through here and then sweep here or here. 0.62 and the 0.705. Or it might just wick it to there just briefly and then just dump again. So just be very careful with that. Set your alerts. and just keep an eye knowing that that's exactly at the 50% mark, drawing from the market structure here to where the current price action is at the moment. And yeah, that's pretty much it for me tonight, guys. Thank you so much for tuning in. Hope you all have an extremely profitable trading week. Be very careful with the red folder news coming up this week. And yeah, goodbye for now. Thank you.